like to welcome everybody to the Apartment and Hotel Investing Insight online meetup. Real quickly, just a couple of announcements of things that we're working on. Uh, Kind of making some changes to the group as a whole. One of the things looking at is bringing in more international people from outside the U.S. to join into the group too as well. So I'm working on that, push hard on that for this last one. But we'll continue to do that. One of the other things looking at doing is offering services to the people who are part of the group too as well, to help out with their businesses as well. So you have that available. Also looking at changing some of the branding too as well. But that's essentially some of the things that are going on. Take a look. We have speakers out till about May 2025. So anybody wants to speak, you can also jump in and join in and speak too as well. Let's jump into the bio for Beth. Beth Bungay, the driving force behind cash cow investments, visionary in real estate success with over 25 years of experience in real estate. He has cultivated a substantial personal asset base, consistently achieving solid cash on cash returns. As the owner of Advantage Appraisals Inc. since 2000, Best Precision and FHA's BHA certifications ensure strength in asset valuations. Her real estate portfolio includes diverse roles in project, asset, and property management and optimizing investments for long-term success. Best venture into hedge fund management equipped her with essential skills for risk management and investor relations, leading seamlessly to real estate syndication. She understands the historical outperformance of real estate as an asset class, making her transition from hedge fund to has been a natural choice to help others create wealth. Best transition from hedge fund to syndication aligns with her commitment to helping others create wealth. Her primary objective in fostering win-win situations, business synergy, and excellent housing environments. Beth a visionary and conservative underwriting and dedicated to achieving benchmark returns for the investor. And with that, I'd like to welcome Beth and to go through our presentation.
All right, beautiful. Thank you so much, Charles. Thank you so much for having me here. And I want to say thank you to all of you because I know today's a holiday, so it's been very easy to
I didn't see you. I didn't pray.
couch, just like we're chilling in our home. So I would love it if you've got questions, throw them in the chat. If your microphone is on and you're talking to your children, they will be on YouTube. So if you do, feel free to go ahead and mute them. But I am here today and I'm here to talk to you a little bit about capital raising. But where I'd love to start is to tell you a little bit about myself and how I got started. How many of you'd like to know a little bit about Beth? Show of hands. Yes in the chat. Okay, awesome. Okay, so to tell you just a little bit about myself, I started in real estate back in 1996. That is when I bought my first house, like many of the people on the call today. And I didn't understand the power of real estate. I was $26,000 in debt, and my future to be husband was like, we need to go to this presentation about real estate. Because he's like, we need to buy a house. I'm like, I can't buy a house. I'm $26,000 in debt. And he's like, that's why we need to buy a house. So went to presentation and we start like the light bulbs just went off like Christmas lights when I understood the power of real estate. And it pretty much became an unstoppable force in my life because I understood the power of it. So I bought my first house and I did buy the worst house on the block, fixed it up. Matter of fact, there was a paneling wall and I literally hand did drywall mud going down the crack of that paneling wall all the way down. And then I took drywall mud and I stirred it up and then I put it over the wall and then I painted it. It was perfect. I'm going to tell you, C-class assets have no problem for me because there's always a creative way to solve problems and make them look awesome. So I thought I was a definite genius. And so I decided I was going to do my first fix and flip. And I am a rock star. I did my first fix and flip, and guess how much money I made? This is solid moolah. I made $50. So I'm going to tell you, it was not the fast boat to real estate, clearly. But you know what that did do is it allowed me to buy my first property in Southern California, San Diego, California, because I had put that money into our first home. And when we sold it, we had enough to put 20% down on a home. So then we moved to beautiful San Diego, and San Diego in North County was still an emerging market, as we hear about with multifamily. It was a market that hadn't exploded yet. It was the last coastal city in San Diego that had not become crazy. So, needless to say, bought my first property, bought our second property, bought some more properties. Okay. We moved to California in 2000. By 2007, we had 10 properties. By 2009, we had 12. Can anybody tell me what happened to the real estate market at that time? Womp, 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 womp. But okay. Yes, it did. It went down and it did go down big. And this is when everybody tells you that they did this, they did that. Well, I had a lot of people coming to me saying, you should just like let go of your properties, don't make your payments, see if you can get a modification. But this is where Beth is different. I signed my name on those loans. And what that meant is that I made a commitment to the people that I had in my homes that were renting from me. And so I never missed a house payment. I was never late on a payment, but I did lose my marriage.
Oh my God.
Okay. So through time, we find out where our tenacity lies. And I knew that I had signed those loans. So where I'm committed to life is there. Are we able to mute Sarah? Charles, are we able to mute on our end?
I logged in. I
Thank
didn't
you,
log in as
Sarah.
I didn't log in as administrator. Unfortunately.
Okay. All right. Awesome. Okay. All right. No worries. We'll just make do. We get some fun sounds, and sometimes that's what life is. We're going to make lemonade out of it then. So I didn't lose any of those homes, and I never missed a payment and was never late. But I can tell you during that period, I had to cut every bill that I had. That meant that I was literally going to a food bank with my two small children. Okay. I made decisions because I didn't want anybody being homeless on the shoulders of my decisions, and nobody was. And I remember at some point looking down and realizing that I had about $6 and some change in my bank account. And from a girl who had her own job at 12 years old and worked for Chi Chi's as a bus girl, that was then the lowest point in my bank account in my history of life. Okay, because I'm pretty sure even my birthday money when I was little had more money in my
I don't
bank
like
account.
that.
But I made that decision to go ahead and go forward with making choices that impact society. And I can tell you today, now, I don't know, we're 15 years out of the great whoop. It definitely made all the difference in my life being in real estate. And why? Because I played the Monopoly game. I've never let go of a Southern California property except for one that I sold it and rolled money into another property. So I am a living testimony that real estate can make you wealthy. So then why would I be in syndications? The reason I'm in syndications is because I believe it's one of the few spaces that you can help other people make wealth. And so that makes me excited to share what I do. And people wonder, is it a magic sauce? What raises money? How do you get people to invest? I'm going to tell you, they invest because of you. You're the number one reason they invest, or don't. So I just want to highlight for you as you're looking at your business and you're wondering, how do I raise capital? I've been very, very successful in this. And one of the reasons is because I don't need the money. I'm doing it because I legitimately know that this is an amazing asset class for people to get involved in. And I'm doing it with a great level of moral ethics. Okay, so I am going to share with you guys and walk y'all through a little bit of a presentation on what really raises moolah. So I'm going to get us started here. I'm going to need y'all's help. Can I get a thumbs up if you guys can see some hot, sexy lips? All right. Okay, so what really raises moolah? Big giant secret, right? I'm going to tell you that raising capital is based on one major element, and that's a trust element. So everything you've done in your life is your platform for your future. So I had a hedge fund, and my investors love me because I help them make money. Now I closed that down because I met somebody that I really loved, and I was like, okay, do I have love or do I have a hedge fund? I love both, but I really love the idea of being with somebody for the rest of my life. So I did choose love. But okay, so I would also love if y'all would do me a favor. One of the best ways to contact me is if your picture's in my phone. So you'll see my Popple QR code throughout the presentation. If you'll just connect with me, if you scan that, it'll allow you to give me your information and then text me a picture of you, because I'm going to tell you the one thing I am in this industry is I am available. Okay, whether I'm on a project with you or not, I am 100% available to answer questions, hop on a Zoom, let's connect, because I do believe in this industry, we are powerful because we support each other. So rather you need me to help you look at an underwriting, you need me to give you some advice, whatever. I just love to connect and let you know that I am available for you. Okay, so just in case we have anybody on the call today that might be new to what a syndication is, I just wanted to quickly touch on it. I do believe most of us understand what a syndication is, but just in case, I just want to go over it real quick. So a syndication is a way that you can help increase your family's wealth, time, freedom through investing in syndications. You can either do it passively or as a partner. So passive is considered a limited partner. So those are our investors that we invite along to help create wealth for themselves and their family, giving them time freedom and life freedom. Okay, syndication is the powerful side of investors all pulling their money together to purchase a large, giant, jumbo asset. Okay, and if you scan my Popple, my QR code, you can actually go on my website and see there's like a 5-minute video. So if you're new to this industry and you're like, how do I explain this to my friends and family? There's like a 5-minute video on my website that will just give you a simplified version of what a syndication is. You play it 2 times fast, you can do it in 2.5 minutes. So, all right, real estate also, I want you to know, is the number one performing asset class out there. So there's nothing with higher returns than real estate. The stock market, if you look at historical stock market, ranges between 10 and 12%. Real estate traditionally ranges between 13 and 20%. It is the number one hedge against inflation. It is a true asset. And as we all know, in the way our society is, the amount of governmental debt that we have, you must position yourself and your family with real assets like real estate if you are to stay ahead of the curve and stay wealthy. So I'm excited. So if you're not really sure about syndications, again, we'll give you more information, but that's just kind of a top overview of syndications. So what does raising capital require? What does it take to have people invest with you? And I'm going to tell you, it is based off a fundamental principle of relationships, creating real, genuine relationships, being trustworthy, likability of the foundations for the business interactions. So where are you going every day, every week, every month, where you're creating those constant relationships? Within this industry, there's a lot of people that know me because I'm plugged into this group or that group, and I'm consistent. I'm not just there, I'm showing up, I'm participating, I'm giving back. So what are you doing to build those relationships? That is the key to truly building capital and building your investor base. And Charles and I were just having a little conversation before we started. And out of all of my investors, over 60 to 65% of them have invested in more than one project with me. And I truly believe the only reason I say more than one is because the time frame between the last couple have been very, very close, and they haven't had a chance to reboot that money well. But I do predict that 85 to 95% of my investors will stay with me for the long term and be with me for over a period of 10 years. And why? Because I plan on being in this industry for the investor side of things for at least 10 to 15 years. So again, what are you doing to be trustworthy? You guys have heard some of my story. What does your story say about your past? What have you done that qualifies you to build that relationship where they trust you with a very expensive asset? All right. Know your assets inside and out. I think it's really, really important that you need to understand the asset that you're on. Okay. Knowledge builds your credibility and trust. Now, that doesn't mean that you should go vomit out a bunch of numbers on somebody and be like, okay, the cap rate is 6.5. And when we exit, we're going to do a 7.2 cap rate and our vacancy factor is 10%. Okay. That isn't what it means. It means know your asset inside and out, so that when you have that investor that is a numbers person, you can connect the bridge. But when you have that investor that's an emotional person, you can explain to them how you're going to create community within your housing development. You're going to get popsicles on July 4th, payday, for everybody who comes in and pays their rent. And why? Because you want to give back. Okay. So you need to know your asset inside and out, from the numbers to the emotional, because some people buy logically and some people buy emotionally. So you truly have to understand both sides of this if you're going to be able to build that relationship with your investors, creating credibility and trust. They're going to like you when they know that you know what you're doing. Okay. And knowing what you're doing does not mean you need to tell them everything, but you do need to know what you're doing. Okay. So articulating and meeting your investor needs. We all, I love when they're like, oh, people are driven out of fear and da, 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 da. Well, I'm going to tell you, with traditionally accredited investors. So accredited investors are not necessarily dealing with the fear of not having enough money tomorrow. Their biggest fears are making sure when they're invested in something that it's safe, that they're not taking on the liability, that they're a limited partner. They do not get the liability of the asset. The general partners manage anything over here that could be of liability. So you need to figure out what your investors' needs are. Maybe like a project I'm on right now, our investors can get involved with as little as $5,000. So for a lot of people who are in this industry and they're just trying to really get started, but maybe they don't have 50,000 or 100,000 to put into a project, but they want to be in a project to see how it works. Well, guess what? Our investment allows them to come in. So for a lot of this, my investors are actually some people who are new in the industry and they just want to get started somewhere. Okay. And then I have my other investors who have $500,000 that they want to put to work and they don't quite understand how powerful it can be and they need me to help them. Okay. So you have to figure out what your investors' needs are. If they need security, real estate is a beautiful place for that because, again, it's a hedge against inflation. It is a space that, when it's ran by great operators who are honest, open, transparent, it is usually a very successful asset class to be in. Okay, so make sure you're aligning your project's benefits with whatever your investors' goals are. So if their goal is to make bucket loads of money going into their future for their retirement, how does this asset benefit them? If their goal is to get exposure and better understand this industry, where can they get involved that they can still have an impact and learn? So a lot of our investors are coming to what we call our investor presentation day. So when we take over an asset, we always have an investor appreciation day. And that's either a day when we first open it up because there's not a lot to do, where they come out, they learn a little bit, they see their asset that they purchased if they choose to come. And then we also host them. It's a party at their own place, right? So align with the benefits that your investor needs. Okay, so remember where I said you got to know what your investor needs. So if your investor is that person who has $500,000 to invest and they are numbers driven, you need to figure out how to articulate it. Okay, so right here, I had an investor, they have 500,000 in a retirement plan. They needed to understand how they could get baby cows working from the returns from the first project. So what I did is I built this out for them. I know one's very creative. She's never going to understand numbers. So we got some colors in there. The other person is very numbers oriented. So I did it on a numerical level for them. So, and if you'd like a copy of this, just text me Cash Cow Herd, and I will make sure to get you a copy of that build out, because you can take $500,000 and turn it into $3.4 million. That's pretty powerful, isn't it? Okay. And I always say, if you don't have $500,000, just minus a zero, and you could still take 50,000 to 349,000. That's moolah. You know, I got to throw some of that cheesy stuff in. Okay. Because it is cash cow investments. Okay. And next, are you investing alongside your investors? So I honestly believe you should never ask somebody to do something that you yourself are not willing to do. And so I do invest alongside my investors in every project that I am in. So I do put my money on the limited partner side as well as be on the general partner side. And the reason I do that is because if I'm not willing to put my own money into an investment, why would I put other people's money into an investment? And that's just a personal stance that I come from. I know not everybody does, but for me, it tells you that I have a personal investment and commitment and confidence in the project. And the reason I'm confident in it is because I've done the due diligence. I've done everything that you would want me to do. Even if I've come in, you know, after it originally began, I still look at the underwriting. I dive through that. In the last 12 months, I've been asked to be on 8 different projects. There were only 2 that passed my diligence checklist. Okay. So I don't just go on projects to be on projects. I go on those projects because they're very good for the investor. I do the underwriting, I go to the property, and then I ask myself, am I willing to put my own money in? And if the answer is yes, and all those other things check off, it's a no-brainer. And it makes it very easy to say, I'm invested in this project right alongside of you. So guess what? I get to go to my own investor day too. All right. So part of that due diligence, I believe, is imperative. You need to take the steps to go through the due diligence. So you need to understand the underwriting. Not that I want you to, you know, spew it all out to somebody, but you need to look at that underwriting and make sure that that underwriting is set up for a successful business plan. Okay. And what does that look like? That means making sure that the numbers are not so thin that there's no room for things not to be minute rice perfect. Okay, so I like to see buffers. I always try to look for what I would consider 3 spongy areas that give us a chance for things not to go quite perfect, but still meet, and exceed expectations. Okay, and I remember looking at a project and a gentleman was like, oh, this is a good return. And I was like, you're compressing the cap rate. So what he was doing as an operator is for the exit amount, he was putting in a lower cap rate. And what happens is when you use a smaller number on the cap rate, it expands out the price. Okay, so when I'm looking at an investment, I want to make sure that the cap rate that we're entering at is either at or above the entry cap rate, because then that is more conservative. So when I went to him and I said, you know, the cap rate actually, if I go back to just where we're entering, the returns are actually off by 2% to the investor. And he's like, well, that's still a good return. Now, I don't know about you, but if I'm promised a T-bone delicious juicy steak, I want the whole steak. Don't remove my filet mignon. And I think you guys would agree. If I took away half your steak, how many of you would like me? Okay, but what if I throw in a juicy, delicious, giant T-bone steak cooked and grilled just right with a jumbo baked potato with butter and sour cream and chives? Y'all are gonna like me, huh? Okay, and that's what we want to do. That's what I try to do for all my investors is overachieve expectations. And part of that starts with the due diligence. So if you get the numbers wrong in the front end, the numbers usually are wrong in the back end. Okay. I also go out and I walk the properties myself. And the reason I do that is because I want to make sure that everything that we have on that due diligence checklist that needs to be done is actually accounted for, and there is money set aside to do it. So if you're tripping through a parking lot through the potholes and there's no money set aside to fix those potholes, that probably means something else was missed in the due diligence period. And so for me, that makes me not very confident in the team that may or may not be asking me to come alongside of them for this asset. So again, due diligence is very important. The physical due diligence on the actual physical property, and then the going through all the leases, making sure we're collecting and having on hand all the deposits, making sure that what the seller told us is the income is actually the income. Okay, so it's our job as capital raisers to make sure that we're safeguarding our investors. You know, this is their hard-earned money, and it's up to you. Again, investors invest with you because they trust you. So are you doing the things that are required for you to be trusted? Okay. All right. So ethical fundraising practices. It is very important, in my opinion, to be fully transparent and honesty in all operations. You guys, I know that there are times that things don't go right, or maybe that insurance quote that you thought you were going to get ended up being a little higher. But I believe 100% transparency and honesty in all operations is very important. Even when it comes to working with your teams, you need to be honest and transparent with them and honest with your investors. You know, we all want to raise capital, but honestly, when I sat down with one investor, even to do crowdfunding, he did not have the income on a small level or any net worth. And I was like, you know, this isn't the right time for you. I want you to be an investor in what I do, but I need you to get yourself stable in your own personal finances. Okay. And what that looked like is in crowdfunding, you still have to make a little bit of income and you still have to have some net worth. And so I have to be honest that it probably is not a good fit, because even crowdfunding, even though we say everyone can participate, it even has a little bit of a bar. So you still do need your investors to have a little bit of a net worth, make a income, right? So ethical practices is imperative for long-term success. Again, I wouldn't take that investor in because why? He didn't qualify. So if I bring one bad egg or one bad apple into a barrel, what happens to that barrel? It gets everything else rotten, right? It's just like in this industry, we are counter interdependent upon each other. If we are all running our assets with integrity and honesty and transparency and making great returns for our investors, guess what? It makes it easier for everybody else. I've only chose to go onto 2 projects in the last 12 months. And the reason for that is because, again, they met my ethical, my goals, my expectations that I have. So I always say it's easier to say no now, because guess what? It becomes easier in the future. Because if somebody's working with cash cow investments, they go, oh, I know Beth. She wants strong return. She wants a good, solid project. She wants it to be good for the investors as well as the tenants. Okay, so what are you doing? What does it look like? All right, and then leveraging your network. Strategies to expand your network efficiently. Speak, become a sponsor. Like, I am a sponsor within our community, so I can sponsor because of my high net worth. This also allows me to connect with people who already understand real estate. So a lot of my investors come from within our own community. And if you don't think you're running ethically, best way to find out is run your request to raise money in your own community. Are your fellow associates telling you yes? Because if they are not, you are probably not doing what you need to do. So you need to stay dedicated, stay present, stay honest, stay transparent. Okay. Continuous engagement and communication. Now, I don't think you need to spam everybody with a billion emails about nothing, but you just need to stay present. I just got back from speaking at Insiders, and it was really sort of fun because they said to me, a lot of them came out to me and they're like, Beth, we keep getting your cash cow emails. And they're like, but we're not D&Ding you because they're fun. Okay. So what sets you apart that people are like, I'm okay getting your emails. Matter of fact, they're kind of fun. I like looking through them because I like to have a little fun. We're doing a Vegas one. So have a little fun with that when I send out some of the wording. So, we are all working very, very hard in our lives. Where can you add a little twist that sets you apart? Makes them think of you one little step. So leverage your network, the relationships. And I always say, some will, some won't. So what? Next, or next time. Because I honestly believe a lot of your investors that are super close to you, they're just not ready to invest with you yet because this is new. They know your past, so they are watching you. Okay. So what are you doing to build that relationship, to expand the network? And always ask for referrals. I'm going to tell you, rich people know other rich people. And it doesn't take much to tell them how to go into the next level. All right, build trust daily. Every day is a reflection. Your actions reflect on your business reliability. Are you getting back those emails? Are you doing what you said you were going to do? Are you showing up when you say you're going to show up? These types of things maintain and enhance investor trust over time. My investors, they know we're going to go to dinner. They know I'm going to buy some wine. They know I'm going to celebrate who they are. And they're all friends. Like, I had an investor actually invite me to come to an event she was going to because her husband couldn't go. Okay. So how funny is that, right? I mean, it's like a huge compliment. So just maintain and enhance your trust over time, being present, doing what you say you're going to do. And then why syndications, the returns, you guys know this. And then when you're dealing with your investors, couple questions. Do you understand the investment inside and out? This is just a quick recap for each one of you. You must be able to articulate to the investor how they can benefit in a very simple, clear, and concise manner, filling their needs. Nobody cares about what you need. They care about what they need. So make sure you're filling their needs. Have you invested in the project? Let them know. And would you put your own mother and father's money into the project, or your brother and sister? Ask yourself these questions. Would they like to create passive income? Do they have a reliable asset that's a hedge against inflation? Would they like to create higher returns on your investment so you have more money and more time? These are questions you can ask people when you're out there starting those new relationships. I know as a female, very rarely do people go, "What do you do?" Okay. It's just not something that women tend to get asked. So you kind of have to find those questions, ladies, that just kind of like ask questions. What are you guys doing to hedge against the inflation? It's crazy right now. How are you passively exposed to real estate? Because it's powerful. So just some fun questions you can ask. And then other questions. Would you like to invest in real estate through an IRA or solo 401k? I know for me, for my investors, I hold their hands. I have somebody who will help them set up that solo 401k, help them move their retirement into a self-directed retirement so they can invest in real estate. Again, emphasizing that it is the highest returning asset class out there. And then would they be able to reduce their tax liability? We have ways to do that. And then make investment choices today so you can retire earlier. Would you be intrigued by that? So if you answered yes, then investing is for you. Okay, so I would love, again, for all of you to book a call, connect with me. I will also throw my chat into the my Populin stuff into the chat bar. And at this point, I am going to escape from this screen. Let's go escape. I'm going to close that. And then screen sharing has stopped as okay, perfect. And so I would love to open this up to any questions. Again, I will throw all my information and I will, our project we currently have, just so everybody knows, I will invite you because I think it's a really cool dynamic project. And I always say the more you learn, the more you end up earning. So whether it's this project or another one, I always like to let people know and be fully transparent that I'd love to have you connect. So, all right. Do we have any questions out there? I love it. It's silent as a mouse here.
Hey Beth, I got a question for you.
I would love it. Yes.
Thank you. Thank you for sharing all your experience, by the way.
Thank you,
So
Daniel.
what are your preferred methods of finding new investors?
So I have found a lot of new investors. So I've done kind of, we have two schools, right? The school of go where nobody else is talking about real estate or go where everybody is talking about real estate. You go where nobody's talking about real estate, you're going to get those investors that will just be associated with you, Daniel. Okay. But those investors are usually harder to convert because they don't necessarily understand real estate. So I do believe one of your easiest places for people, if you're looking to raise capital and raise it quickly, is going to be within the real estate community. And if you're in the multifamily arena and you go to a single family house kind of, pen, you're the big bull if you're the one in commercial. Okay. So, but even there, like bigger pockets, like it's overwhelming to a lot of people still, the whole commercial side. So, but I do believe that most of your investors, or at least I've seen with mine, easily 50% of them already have real estate, and it's just a way to add to their portfolio. And we joke because they're buying smaller houses than they have, especially because California, our homes are crazy expensive, right? I have a $1.4 million rental. Who has a $1.4 million rental?
That's crazy.
I have a question. So what would
Yeah.
you recommend, Beth, if someone, me and my friend Brianna, she's on the call, we want to start, I'm in the South Florida area. We thinking about starting like an investment group to, once again, of course, improve our network, but also build a team of investors. And we have properties, people are ready to go. So what do you think were some of the first steps we should take in terms of starting a group in our area?
Yeah, I think anytime you've got the bandwidth and space to do a group, the big thing is number one, you need to be consistent. If you do it, you need to stick to it. And it's not, oh, we're going to try it out once or twice, because the once or twice won't build the continuity you need. If you could only do it once or twice, I say plug into somebody else's organization and just keep showing up. But if you can be consistent and do it, let's say once a month on a Tuesday night or a Wednesday night, and you can be consistent about it, that is a great way to build credibility because you guys are the ones hostessing it, right? So that's going to build a natural respect for you, Angela, you and your business partner. That's just
Mhm.
going to naturally build some of that respect within the community. But you have to be consistent because Rome was not built in a day, neither is your business.
Right. Okay. Thank you, Beth.
Of course. Thank you for great questions. I love them.
So Beth, for your first investor, how did you find it and how much they invest? Else your family, your parents' memberships. Okay, thanks.
So I think one of my first investors that I tied to a post and I beat really hard was my brother. No, I'm kidding. I didn't tie him to a post. I didn't beat him, but my brother trusts me. I don't know if your siblings trust you. My dad doesn't have money, so he clearly couldn't invest. And my mom passed away in January. But my brother is invested with me. My boyfriend has invested with me. So these are probably two of the closest people to me. So that right there answers your question. My boyfriend was bringing in 50K to a project, and by the time he actually brought his money in, he was up to 150. Okay, so that's not like, hey, I'm just doing this out of courtesy. That's a, hey, I know freaking what a rock star you are, and I know my money's in great hands, so I trust you. Similar thing with my brother. He started out at the minimum, and he came in with far more than the minimum.
Okay, so
And also too, my first investor, honestly, is myself. Because remember, I'm not going in the project unless I'm willing to put my own money in it.
That makes
Did you know if you're a GP, you can just roll that acquisition fee over to your LP side so you don't even pay taxes? So I make my commitment into the project and then I wait till we get to the end where we're doing all the checks and stuff. And so I'll bring in the cash on the other percentage that didn't come out of any of the payments up front. If that made sense. If you're not in this business, that was like, what is she talking about?
Yeah, repeat that again one more time, Beth. Say that one more time again, just one more time.
Okay, so y'all know, like, if you're a general partner, you usually get part of what's called an acquisition fee, which is you're paid that like little bit of a check in the beginning because you've worked your arse off to raise the capital, to vet the project, to do all the underwriting, right? And it's usually anywhere from 1% to 5%, depending upon how complex the property is, how much money might need to be raised. Okay, so let's say you're making $10,000 of the acquisition fee as a general partner. You can actually have that money go directly as an investor into the project. Okay. And instead of it coming to you, you don't have to pay taxes because it just literally goes from the LP side to or from the GP side over to the LP side and you never touched it. So you don't end up having to pay taxes because it never got directly paid to you. It got invested on your behalf.
That's great because, oh, wow, my sister just said something the same thing. And I'm like, no, Jack, get that acquisition fee. But now what you're saying makes sense rolling into we just had a conversation with me and my sister. Thank you. And then you can double your money. You can reap the benefits of the investment too as an LP. Makes sense. Thank you.
And I just to piggyback on that, I just had a conversation with my accountant today and saw that a lot of those fees that I received, I didn't roll them as LP, but I took them. So those get taxed as a self-employment income, which is a higher tax bracket.
Yes, which is
Correct.
why.
If you don't need the cash, it's actually, I agree with you. If you don't need the cash, it's actually very smart putting it as an LP investment.
Yeah, and I like I said, I am blessed. I'm one of the few who probably is doing this and doesn't have to do it. I mean, if I walked away tomorrow and never worked, I'm fine. So when I legitimately say I'm on projects because they're good, like it's got to be good for my investors. Because at the end of the day, I'm doing this because I love them and I love giving people good homes.
Yeah. Beth, can I ask you another question? You mentioned there's a couple of project or there's a project that you were part of where investors could bring $5,000 minimum. How does that make sense? Because I feel like like from my perspective, we kind of like struggle sometimes, with smaller investors. Even if somebody brings in like $25,000, maybe, you know, uh, you know, that's still kind of it's a good
So
amount, but when you're raising a good chunk of money, 5,000 at the time, it's not,
So
it's not that much.
this one's a bit of a unicorn. So I'm going to put it in I'm going to actually put the link over here in the chat, you guys. INV. I'm going to make sure I do this right. I'm going to go slow. So if you want to just drop in, I'm no pressure. Trust me, I'm no pressure, but I'm going to drop in the link, cashcowinv.com. Can somebody click on that link and tell me if it comes up as a registration form?
Yeah,
Can somebody?
it does.
Okay. Register, come to the webinar. It's on Wednesday. It is one of the few and the only projects that I know out there that actually has a crowdfunding portion to it, which is why we're able to do the $5,000 for the investors. Now, you guys are all in the same business I'm in. And at the end of the day, you're pushing out letters of intents to brokers. Imagine how much more strength you have when you're pushing out a letter to a broker and you have 233 units in Las Vegas, Nevada. All of a sudden, you're building that schedule of real estate and they're seeing you're involved in this industry. They don't know it was a $5,000 crowdfunding, but they see 233 doors. You've just built your own credibility with that broker. You don't have to tell them you only put 5,000 in, but you're going to be in a project. I'm going to tell you, this is an amazingly dynamic project. Like, this is one that is changing lives, not just for the not just for investors because the returns are freaking great, but it's also changing the lives for the people that we're impacting with this project. So it's a no-brainer to just come and check out, register. I'll make sure you have the Zoom link on Wednesday, but it is the only one I've seen with a $5,000 minimum. And I can tell you, as much as I love everybody in this industry, I would probably never do one with a $5,000 minimum again. But as long as we have it, I would love for as many people to be able to benefit from it as possible. So, okay, Curtis, good to see you, man. How's the yacht?
That was great. Nice trip I took, but I just wanted to put something exciting in the background. But
Hey,
again,
I love the yacht, man, when you invite me over.
oh yeah, definitely. Hey, I just wanted to thank you for your time, Beth, and sharing all your information. I'm an investor. I'm a new investor. I just wanted to ask you in reference to commercial property. I was looking. I was actually thinking about going the route of apartments, commercial apartments. And I wanted to ask you: are you using the master lease technique to get into some of these properties, or is that term something that you are familiar with?
It's funny. I know what you're talking about, master lease, where you have the owner hang on to the property and then you run it and operate it so you don't have to go get a bridge loan to get so you can get it to permanent financing without having to have the bridge loan to get it there. So yes, that exists in this industry. I have not done it in one of my properties. However, this asset that I'm on, we actually had somebody lease out 9 units from us on a master lease. So we're getting 100% of the rent.
Okay.
Come check that out.
Yeah, I was just wondering because I wanted to learn more about that aspect of it, but I just registered for your webinar, so I definitely want to jump in and see if I can be a good fit for you.
Love it, Curtis. I love it. Yeah, I mean, it's definitely, I would say on that, if you're doing it to purchase, the biggest thing that you're going to need is you're going to need to make sure that you're legally protected and have the right lawyer drawing up the documents. Because at the end of the day, unfortunately, people are greedy. An owner all of a sudden sees their property turn around. And I've heard, kind of some tainted horror stories.
Yeah.
But, that's just like in any industry, right? There's always that, there's always, because it's October, I can say there's always somebody running around with a chainsaw.
Yeah, I actually called a few lawyers in reference to it, but I never got a call back. So I'm calling the wrong lawyers, apparently.
Yeah, and you do want to make sure, what state are you in?
I'm in Georgia.
Georgia. Okay. I mean, I can try and put it out there on the platform because I'm plugged into a lot of people. If you want me to, just shoot me a text and I can see if somebody's familiar with a lawyer in the Georgia area that's familiar with master leases, because it would be state by state specific.
Okay, yeah, definitely. And I'm open to investing in other states. So just wanted to put that out there.
Awesome. Awesome. I love it. Thank you, Curtis.
Thank
I
you.
have a question, Bethany. This is Angela again. If we had a property that we wanted you to possibly take a look at that we need to close, how could we connect with you to share our executive summary with you? I have a property like
I do sponsor. I do sponsor if the numbers are good. And the reason I say that is because I do not believe in sponsoring somebody that I also wouldn't raise capital for their project, which means that I wouldn't be a sponsor on something I also won't put my own money into. So, because I'm not doing you any service new in this industry, if I say, hey, I'll sign on your loan, but I'm just doing it to make the money on the loan, I'm not doing you any service, because if I think that there's pitfalls in it, you'll know, because I'll say I won't sponsor it. But best way is I have a calendar link. If you connected with my Popple, I'll put it in here again. If you connected with that's the webinar. Let me grab my Popple up here. If you connect on my Popple, it does have, and you save my contact, it'll have a calendar link in there. And calendar links are the best way to get 100% of Beth's attention. And it's way far up here. Okay, I found it. So again, connect with me. My calendar link will be in there. Book out, a half hour, 45-minute call, and I will look at it for you. And if it makes sense, 100%, I will help back you.
Yeah, we have a key sponsor. We just need the rest of the capital to close the deal. So does that kind of work for you as well? Same thing? Are we saying the same thing?
Look at it. Because I
Okay.
will raise capital if I think it's a really good, valid project.
Okay.
So
all right. I'll schedule on your calendar. Thank you so much. Great information.
Yeah, of course, of course. Jason, you've been so patient.
Hey, how are you, Beth? Thanks for everything tonight. I just wanted, I guess, a recommendation. I know a lot of people will say that, if you're going to do an investment, that it's important that you invest your own money into it. I have recently been in 3 deals as an LP, and I'm kind of cleaned out. So, the next step is I'm looking to be a GP, but I won't have money to invest in that deal. Any recommendations, or what you think I would do, moving forward?
Well, if you're going to be a GP, you're always going to have your acquisition fee.
Yep.
So you can always commit that.
Okay, sure.
We'll make more money.
Yeah, there's that. Yeah. Yeah. Okay. That's
The end of the day, too, I mean, you've invested. It's not like you've said, hey, I don't believe in the process. Like you've already clearly raised your hand a couple times, right?
yeah.
Because you're invested in stuff. So, and I do get, like, there's, not everybody has an unlimited funnel. I can appreciate that and respect that. But ask yourself, if you had the money, would you do it?
Yeah.
Okay.
Well, and the last investment that I'm making, they wanted me to be an LP first before allowing me to get on their second deal as a GP. So that's, they wanted to make sure that I was for real, kind of thing. So I guess all that makes sense and aligns with what you're saying.
Okay. And Jason, I want you to circle back to me in 12 months and confirm that they were honest,
Okay.
because that's going to make me grumble if they weren't transparent and they just did that to have you become an investor, because that makes me really grumbly.
Okay. That makes me uncomfortable too now. All right. Well, thank you. I appreciate it.
And that's why unfortunately, the good or the bad about Beth is that she's honest. And so I'm hoping that these people didn't do that just for that, because that would make me grumbly.
Right.
So
Okay. I
reach out,
appreciate it. Appreciate your honesty.
contact with me, man.
Will do.
Okay. Okay, so Anthony, you don't have your camera on, which means that's bad for your TLC life. but your hand's up, so I'll let you.
Hey, Beth, how you doing?
I'm good. I'm good. How are you today, Anthony?
Awesome. That's pretty good. I'm doing pretty well. Thank you. No, thanks for the time this evening. Going after capital raising. I'm just have a quick question. When raising capital, at what point do you involve the SEC? Is there over a certain threshold, or raising for multiple individuals? Just curious, at what point do we need to involve the SEC, if we need to involve them at all?
Okay, so when you're doing a syndication, right? We all kind of get what that is. We're raising money from outside people. It's not a joint venture with 3 or 4 people. So we're getting money from a lot of different people. You're going to do a syndication traditionally just with a syndication lawyer. Okay. Where you would use the SEC, which our project is an SEC regulated project, and that is because it has a crowdfunding. So that's a whole nother level of due diligence, background checks. The SEC dives in. I had a hedge fund, so it's closer. It's not quite a hedge fund, but it's closer to that amount of scrutiny when the SEC comes involved, which is usually if you're going to do a crowdfunding portion of your raise. Okay, but otherwise, you're just working with a syndication lawyer who's drawing up those legal documents that you're presenting your business plan. One operator in their business plan said that they were getting typical financing and then put a bridge loan on the property. Do you see how that could be a problem?
Yeah,
So our
indeed.
syndication documents that our lawyers draw up are to protect us and our investors. So you would not necessarily use the SEC. They are like keeping an eye over the industry, but you're not going through their scrutiny unless you're doing something like a crowdfunding portal, or unless
Okay.
if you screw up, they'll come visit you.
Okay, no, thank you. No, that's very helpful, Beth. Thank you so much.
Of course. Thanks, Anthony. All right, Master.
Yes, how you doing?
Good, sir.
So what is your criteria for investing? Let's say, for example, if someone, bring a deal to you, and just say, since you have the resources for us, to help, raise capital, for that particular deal, like what would make you pull the trigger?
So I'm looking at it from the investor point of view. So I'm looking for, and everyone's going to be different. So if it's a value add and we're going to go in there, we're going to remodel, I'm okay with us being light on the cash in year 1, but it still needs to be positive, even if it's only 2 or 3%, because otherwise we're not buying it right. Okay. And then I'm looking for a cash on cash return for my investors of anywhere from 7 to 8%, where they can get a preferred return. I don't mind parking my returns. I want to take care of my investors. At the end of the day, if you don't take care of your investors, you do not have a business 2 years from now.
Amen.
Yep, I hear you. Like, you can go line your pocket with all the acquisition fees you want. At the end of the day, if you're not taking care of those investors, they are not going to invest with you. They're not going to invest with me. They're not going to invest with Ronald or Amir. We want to be taking care of our investors. If you take care of your investors, you will have an unlimited supply of business. Okay. And so what that looks like on the returns, and obviously the more risk they're taking on. So an older asset class means they need higher returns. Okay. If it's an A class asset with less risk, the returns can be lower. The doctors love the trophy properties, right? They love their A class assets, and they're okay with 14% on an A class asset. But if people are going to, hang on through a value add, then we need to make sure that we're giving them something for that weight. Okay. So I do like to see investors getting between 17 to 19% returns. Okay. And that's because I am looking for something where we really have an opportunity, either adding in value, or we've gotten a little creative on how we are actually going about getting rents. So again, the project on Wednesday, you guys it will blow your mind. It will definitely blow your mind. So, and our returns for our investors are actually north of 20% for our accredited investors. And that was after underwriting it with a 13% vacancy factor.
What about for non-accredited
Jump in real
investors?
quick. Hold on. I'll jump in real quick. It's getting late. I want to make sure we have time to go to the networking session. But what I want to make sure is that if you have a question, that you're able to get Beth's information and reach out to her directly. Before you end, I want to make sure I announce what I had earlier, because there's more people here now. Essentially, there's two different things going on with the group. One of those is that you're going to see a little bit of difference in the branding for the group. What I'm looking to do is to reach out to more international members to bring them on, or extend the reach of the group as well. I did that for this one, but I'll continue to do that and look at other ways of bringing people to do this as well, so you have that reach. You're also going to see some services that will be available to you to help your business too as well, that have an opportunity to get involved in with as well if you want to. So start to see that and changing a little bit of the branding going on for the group as well as we move forward. With that, let me go ahead and stop the recording.